Hello and welcome to Market Wrap number 168. Stuart Williamson here at the helm. This week we cover the latest research from Zoopla. So please do like, subscribe, and I hope you enjoy it. It's just to help us make buying decisions. The headlines this week are: North-South divide emerges in house price growth. But more flexible working demographic trends from an ageing population, a strong labour market and high immigration will support movement and sales over the next 2 to 3 years. So it's looking positive. Get into the detail. Let's look at the report. Higher mortgage rates weigh on market activity. The housing market continues to adjust to higher mortgage rates and cost of living pressures with weaker demand, fewer sales and a very low house price growth. It's a slow and drawn out process exacerbated by seasonal factors, but market activity continues to track in line with 2019 levels, but remains well below the levels recorded over more recent pandemic times. Looking at the last 4 weeks, Zoopla's leading indicators show demand for homes is running 34% lower than the average compared to the same period in the last 5 years. So that's 2018-2022. In addition, sales agreed are down to a lesser degree, less 20%, as the availability of homes for sale has rebounded and is more out there to be purchased. It has been a period of scarcity, it's people getting gazumped and so on and so forth. So house price is a sort of scarcity has had a real impact on that. Overall, southern regions register the largest house price falls. Weaker demand, more price sensitive buyers and fewer sales have led to a rapid slowdown in house price inflation. The average inflation currently is 0.1%, so it's at a virtual standstill. But remember, it's a regional mix. Okay, there is a clear north-south divide in house price inflation. All regions across southern England are registering year-on-year price falls. Okay, all other regions and counties, even countries, the UK, Scotland, Wales and Northern Ireland, are posting low single-digit growth. Scotland actually had the highest growth at 1.7%. Why is this? Well, Zoopla say this pattern of price changes reflects the greater impact of higher mortgage rates on higher value housing markets. Okay, so buyers in southern England need larger mortgages, bigger deposits and higher incomes to buy. So this effectively prices more buyers out of the market, weakening demand and pushing down prices. In contrast, levels of market activity are holding up better in more affordable markets, so the Midlands and the North. These trends will continue, according to Zoopla, over the rest of 2023 and into 2024. Prices are holding up where first-time buyers also can still buy. Zoopla believe that the variation in house price growth across the UK is partly explained by the ability of first-time buyers, FTBs, technical term, to buy at higher mortgage rates. FTBs account for 1 in 3 sales a year, most of whom originate from the private rental market. So they're coming from rental into FTB. This means the dynamics of renting and buying will impact on demand and prices. So, low mortgage rates over recent years made mortgage repayments for buying much cheaper than renting. This supported FTBs. The demand, and it led to many FTBs opting to buy 3+ bed homes, bypassing the normal 1 and 2 step flat and smaller houses. But now with mortgage rates over 5%, it's now reversed this trend at a national level, making renting 10% cheaper than buying, despite high growth in rents in recent years. However, the experience for would-be first-time buyers varies across the UK. This is where you get the regional mix coming in again. A renter buying the home they rent will find it cheaper to buy in 6 regions across the north of England and Scotland. In Scotland and the northeast, average mortgage repayments are up to 18% lower than rental costs, whereas in the south it's 10% the other way. This supports access to the housing market and the demand for homes. In contrast, it's more expensive to buy a home than to rent across all areas of southern England. In London, the average monthly payment is 24% higher than the monthly rent. Higher mortgage rates are pricing more FTBs out of the sales market across southern England, reducing demand and compounding downward pressure on house prices. The actual position is worse for all FTBs when allowing for the fact that mortgage lenders require new borrowers to be able to afford higher stress tests, closer to 8.5%, which is much higher than the normal 5.6% used for second-time buyers. This reinforces Zoopla's view that price reductions will remain concentrated across southern England, where affordability challenges are greatest. Lower house prices and mortgage rates are needed to stimulate demand and sales. Okay, on a general level, Zoopla say that we're on target for 1 million sales completions in 2023, which is down 23% compared to 2022. Whilst house price growth has slowed rapidly over the last year, the primary impact of high mortgage rates has been actually lower sales volume, so less people selling. Zoopla's year-to-date figures show the market is still on track, as I said. It will actually be the lowest number of sales in any one year at 1 million since 2012. And that's the equivalent of an average household moving once every 23 years. So the market really has slowed down. So you've got two parts to it. North-south divide, more affordable places are selling well. Another topic is cash buyers hold steady as mortgage sales drop. The big driver on that statistic is fewer sales funded by mortgages are going through because of the higher mortgage rates. Based on trends over Q1, Zoopla estimate that cash sales will fall just 1% over 2023 compared to 2022 levels. However, the number of mortgage sales is projected to fall by 28%. The net decline across cash and mortgage buyers in general is 21%. Existing homeowners using a mortgage typically account for a third of all annual sales. This group is under less pressure to movers who already have a home, and where possible, they're waiting for the outlook to improve and mortgage rates to get better than they are at their current levels. The economics also of new buy-to-let purchases are also being squeezed by high mortgage rates. Mortgaged buy-to-let purchases typically account for 8% of sales. However, buy-to-let investors in southern England need to inject 40 to 50% of the property value as equity to get the buy-to-let numbers to stack up, meaning new investment will be lower in 2023. That's not the case in the north. It's a lesser investment, more like the 25% figure. So again, affordability counts a lot there. So whilst first-time buyer numbers will be lower in 2023, Zoopla expect them to hold up as a result of more flexible working arrangements. Basically, people being able to work from further away means you can then buy in a cheaper market that's further away from your office but still works some time from home. In addition, more landlords are selling up previously rented properties, and these are previously rented properties are typically 25% lower price than the average in the market because more wear and tear has been exhibited. So it's boosting more available stock, and that stock does appeal to first-time buyers who want to do up. Housing affordability remains the primary barrier to more sales, both the level of house prices and the cost of repayments. As I said, the challenge is the greatest in the south of England, where the household income to buy a home remains high at £75,000 in many areas. And considering the average wage in the UK is only £32,000, that's twice the national average. Higher mortgage rates have increased UK mortgage repayments by 23% over the last year, which is £216. Now the mortgage rates are starting to drift low though, it will start to ease and it will become more affordable. Zoopla expects the rates to fall below 5% later this year, but it looks set to be a drawn-out experience. because financial markets are still evaluating how high rates have to be to keep inflation under control. Zoopla believe that any changes to mortgage rates will only really have an effect from 2024 onwards, Q1. However, affordability is improving relative to earnings as wage rises go up, and wages are going up quite strongly in the UK, at over 7% at the moment. So housing affordability on a house price to earnings basis is 9 to 10% over 2023, and looks as though by 2024 it'll have fallen to the 20-year average of 6 times 3, 6.3. On a regional basis, affordability has improved most in London, where price to earnings ratio will get into single digits for the first time in 11 years, as house price growth is slow and wages are going up strongly. Zoopla expects earnings to continue to rise faster than house prices, again throughout 2024 and into 2025, and with mortgage rates coming down to 4 to 5%, it'll support sales volumes. Overall, looking ahead, Zoopla remain optimistic about sales volumes rather than house price growth. So more houses are being sold while house prices rise slowly. They say that more flexible working demographic trends from an ageing population, a strong labour market and high immigration will support movement and sales over the next 2 to 3 years. That's their view. Just bear in mind that the Zoopla House Price Index that we report on now is on sales-based price index, use sold prices, mortgage valuations and data for agreed sales. So it's the largest index in the UK, so it should be the most transparent, much better than nationwide. And it really shows how the north-south divide is becoming exacerbated. House price growth for the year to date in Edinburgh 2%, Nottingham 1.9%, Birmingham 1.2%, Leeds, Sheffield 0.9%, and so on. Whilst London, South East, South West, Bournemouth, Southampton, all those sort of places are down by more than 1%. So there we go. Quite technical this week about what's gone on the market. I hope I put it across correctly. Feel free to comment if I did not, and very happy to get any feedback. It's very good. Please do like if you can, subscribe, and if you have any questions about property in the UK, buy to let, buy to live, HMOs, BRRR, any of those sort of things, please do get in touch. We're here to help. Thanks very much. Cheerio.